Good morning and good afternoon, Mr. and Madam Speakers, distinguished guests, ladies and gentlemen. Welcome to Mining the Miners. Is that the right option to tax crypto assets? My partner Alifian Pramudia Wijaya and I, Dinis Dusina Ramadhani, are very honored to be your master of ceremony for today. It is our pleasure to welcome all of you here, the Honorable Bapak Rahmadi Murwanto, Director of Polytechnic of State Finance STAN, Ibu Gita Hai, Chair of the Executive Board of Capabuild, Bapak Federico Rapati, Investment Manager at the Process Group, Ibu Alexandra Blau, Tax and Technology Specialist at Stripe, Bapak Prem Kumar Baldosing, International Tax Expert at Capabuild, Ibu Rohini Agarawal, Principal Consultant at ARX Business Advisors LLP, Bapak Gary Beck, Head of Teaching and Learning, Department of Education, Western Australia, Bapak Adika Bibing Purwanto, Employee of Directorate of Tax Regulation 1, Directorate General of Tax. Distinguished guests, ladies and gentlemen, this webinar is the sequel following the previous tax discussed about voluntary tax disclosure program. We are delighted to welcome all of you here once again, and for those who joined this webinar for the first time, we would like to say welcome, and we really hope that this webinar could give you the enlightenment that you expect.
Semoga Anda menikmati webinar ini.
Before we begin, let us bow for our heads for a moment and say a prayer in hope that our webinar will run smoothly. Moment of silence start. Amen.
Distinguished guests, ladies and gentlemen, this webinar will discuss about one of the most interesting talking
Going to officially begin our webinar with opening remarks from the Director of Polytechnic of State Finance STAN. To Bapak Rahmadi Murwanto, the time is yours.
Thank you, Dinis and Alfian. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera bagi kita semua. Distinguished Bapak Federico Rapati from Prosus, Ibu Alexandra Bol from Stripe, Bapak Andika Bibing Purwanto from Directorate General of Taxes, Ibu Rohini Agarawal from ARX Business Advisor LLP, and of course our very own Bapak Primadita Fitriandi from our lovely campus. And also distinguished Ibu Gite, Bapak Paul Dehan, and Bapak Prem Kumar Baldosing from Capabuild, and all of the participants. I am honored to welcome you all in our second international webinar series in taxation in 2022. Ladies and gentlemen, people said that crypto is the next big thing in Indonesia. As a matter of fact, now Indonesia leads the world in crypto adaptation according to the survey from the late 2021 to early 2022. About 41% of people reported their crypto ownership, making it far higher than the percentage in the United States and the United Kingdom. This gaining popularity is also true if we look at the fact that above 12 million people are crypto investors, whereas only 7 million are recorded as stock market investors. The promising feature of cryptocurrencies to protect against future inflation has captivated many Indonesians. Further, unlike traditional financial products, crypto assets can be transferred and held without the intervention of traditional financial intermediaries and any central administrator having full visibility on either the transaction carried out or crypto assets holdings. Since 2020, Commodity Futures Trading Regulatory Agency, or BAPEPT in Indonesia, has regulated the wide list of crypto assets approved for trading in Indonesia. In mid-2021, cryptocurrency transactions have gone up dramatically and amounting to 370 trillion Indonesian rupiahs. Meanwhile, recently, crypto assets value seems to fluctuate. However, the dynamic of crypto assets growth was predicted to continue in line with the rapid expansion of the digital economy. In response to this phenomenon, the Ministry of Finance, through the regulation number 68 PMK.03 2022, governs the tax consequences of crypto asset transactions, one of which is the value-added tax. Some argue that this would make the crypto assets more legit. At the same time, others concerned that the additional burden for investor. From the perspective of tax administration, the implementation stage of this regulation would also pose significant challenges. The VAT imposition on crypto assets transactions certainly requires an adequate mechanism for compliance monitoring purposes. Nevertheless, the approach adopted in Indonesia may not reflect the world's view. Other countries, for instance, tend to treat crypto assets as VAT or GST, exempt or out of scope. This seems an interesting issue to explore further. Today, the issue around the indirect tax treatment of crypto assets transactions will be further elaborated with insights from our prominent speakers and discussions here today. It is truly a precious opportunity to present them with diverse backgrounds in a panel. To all speakers and discussants, we again thank you for your time to be here. We also extend our special gratitude to Capability for the constant support since last year during the highly successful International Tax Seminar webinar series, the first series in 2022 and for today's. And I was told there will be more in the future for arrangements in international webinar seminar. I hope this webinar will bring more cooperation in the future. Please enjoy the webinar. Thank you. Terima kasih. Wassalamualaikum warahmatullahi wabarakatuh. Om Santi 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 Om.
Thank you very much for your remarkable remark, Bapak Ramadi. Now, before we proceed, we are going to take a group photo. So, for all of the participants, please kindly to turn on your camera and prepare your best pose. But first, I'd like to confirm to the operator, is everything all set? Okay, thank you very much. We are going to take 3 pictures. So on my count, 1, 2, 3. Okay, another one. 1, 2, 3. Okay, the last one. 1, 2, 3. Thank you, everyone.
Distinguished guests, ladies and gentlemen, it is necessary to inform you that we will provide certificates for participants who fill in the registration form and the evaluation form. The link for registration and evaluation is going to be informed during the webinar via the chat box. We also provide free goodie bags for the chosen participants who deliver questions to the speaker. So, we really encourage you to participate actively in this webinar.
Distinguished guests, ladies and gentlemen, this whole session is going to be moderated by Mr. Gary. Please do let me introduce him by reading his short profile. Mr. Gary Deck is the Head of Teaching and Learning, Department Education, Western Australia. He's a passionate holistic educator and a training and seminar leading specialist. He has worked on 4 continents in range of settings in adult, primary, and secondary education with increasing focus on managing projects in online training and learning. He is involved in child and adult education in Chile and Italy, managing indigenous education projects, and teaches in Tanzania and Western Australia. He also coordinated the Agape Hope Children's Home in Tanzania since 2017 and co-managed the Fundisha Teaching Training NGO in Tanzania.
Mr. Gary has three educational backgrounds. He attained his Bachelor of Arts in Modern History, specializing in Civil Rights and Race Relation from the University of Western Australia and graduated with honors. He completed a Graduate Diploma of Education in History and Spanish from the Murdoch University, and the most recent one, he achieved the Master of Education in Educational Leadership and Administration from the Edith Cowan University in 2019. Ladies and gentlemen, now, please welcome our moderator, Mr. Gary Dack. Mr. Dack, the floor is all yours.
Thank you very much, and thank you for the warm introduction. And I'd like to extend a very warm welcome to everyone who's joining us. A good afternoon to our guests in Jakarta, and indeed, I imagine, around Indonesia. And a good morning to our colleagues in the Netherlands. And we're joined today by speakers from across the globe, which is a wonderful privilege to have. As you can see, it's a great honour today to be able to sit alongside Dr. Gita Haj, who is the Chair of CaperBuild, and we're able to join you just to your south, your southern neighbour here in Australia. We've got a very windy and wet day here in Perth, Western Australia, but it's a joy to be able to join you together today for what's such a pivotal and important topic, something that we feel like we're really on the cusp of a new and emerging technology, and the regulation of it is going to be such an important aspect. So as I mentioned before, it is a real privilege to be able to bring so many people together from so many different parts of the world. And it is also something that we must acknowledge is, a wonderful aspect of the current global climate. But I'd also like to acknowledge that the global times that we are going through and the various concerns of the globe, we recognise through our partnership with the Polytechnic of State Finance in Indonesia and CaperBuild that an equal experience around the world is not being had, and the current reality is not an equal one for everyone. So when we do come together and form this partnership between PK Anstan and CaperBuild, a large focus of what we do is bringing together experts on taxation topics, and you are going to hear from them today from across the globe. And we strive to enhance knowledge and indeed capacity building on domestic resource mobilisation with the aim of creating a fairer and more equitable world. And that's very much what the foundation of what Dr. Murwanto spoke about, this partnership that we have between CaperBuild and PK Anstan is all about. So I would like to join our MCs and thank them in such a warm welcome, and join in welcoming all of our participants today. The most important thing for you as participants is understanding that we aim to have as engaging and interactive a webinar as possible. You are the central piece of this. Although we do have experts joining us, we love to hear your feedback, your perspectives in particular, and also your questions. A large part of the webinar is devoted to your questions, so please make sure that you use the Zoom chat function to make comments, to disagree. We love disagreement with our guests, and to ask questions away, and we will have those opportunities towards the end of our discussions today to get to those. And I will be reminding you of that as we go through. Again, a reminder that we do have the Indonesian function. So if you would like to jump over to the Indonesian channel, you can follow along there. And one of our bilingual hosts that we have today is sitting alongside me. That's Dr. Gita Haj. And again, it's a real pleasure for us to be able to meet up and join up together. Gita has an extensive background not only in development and in tax, but she's also a very passionate futurist. And so that's why today's topic is of special, not just interest to her, but she has had an ongoing and extensive following of this space, if you like, for a long time. And I'm sure she wouldn't mind me also mentioning that she's a grandmother. And I think it's through her grandchildren as well that a lot of this knowledge has come from, but also to link back to what we were talking about finding a way of combining this new technology with regulation and a solid understanding of how governments can best manage crypto assets so that we can create a fairer and more equitable world. So opening the presentation today is a joint presentation by Gita Hage, and she's going to be joined also by Federico Rapetti. He is joining us from our partners, and just like we partner with PK and Stan, we also partner with private and public organizations. And NASPA's process is a large multinational corporation, and they keep a very close watch on emerging technologies. And we like to speak to companies such as NASPA's because we believe that tax is a conversation, that it's not in independence that taxation happens, and it's not only the role of government, but it is indeed a conversation between business, and understanding their perspective is vital. So Gita, I'd like to throw over to you to open proceedings.
Thank you so much, Gary. And indeed, it is a privilege to sit here together, because normally we sit behind our own screen and very enviously look at all those of you who can share the same space. And today it's for us a first. So this is wonderful for us. We are extremely grateful to Peke and Stan for allowing us this opportunity to co-host and provide speakers for this fantastic topic. And yes, we've done webinars before with Peke and Stan, and I agree with Pak Movanto. We really hope that there will be many more to follow. It's a journey for both of us, and everyone learns on this journey. And that's what Kappa Build is about. We are a public-private partnership, as Gary mentioned, and we're very grateful to all the students, participants today, and we're extremely grateful to the support team on both sides and the speakers who willingly gave up time to join us today and share their knowledge. Thank you. Now, we immediately jump into the topic, and I will just say a few things. As Gary mentioned, I am not only an international tax lawyer, and I worked in development aid for a long time, but I'm a futurist as well. And futurists love to look at the future, what's going to be out there. And I knew nothing about crypto assets until 2018. And in 2018, I was in London and I met with Vinay Gupta. Vinay Gupta is one of the key people behind Ethereum. He had left Ethereum at that stage and had set up his own company, Materium. A lot of my views around crypto assets are shaped by his work and his followers. Not knowing something about crypto assets is human. No one can ask a silly question. We all are learning in a space that is moving incredibly fast. And yeah, we can go to the next slide. And at the moment, we see a lot about cryptocurrencies, but crypto assets is a lot more than currencies. But we see that the news coverage at the moment is all about the cryptocurrencies. And what we see there is that we see a lot of speculation in the market, and speculation is never sustainable. So although a lot of people have lost a lot of money in this space in cryptocurrencies, it is a good reality check to say, what is this really about? And it's more than just the cryptocurrencies that should be a tool to make trading easier. But to give you an example of what a crypto asset can look like, I take the example of a game. and that is Roblox. And as Gary mentioned, I play Roblox because I have grandchildren, and I feel often they don't really like to play with me because I'm not as good as they are. But Roblox for me is quite an eye-opener, because in Roblox, you need to buy Robux. You can't just buy, as we call, legal tender money, or we call it fiat money. Those are currencies that governments issue, like rupiahs or dollars. No, you need to buy specific kinds of money in order to play Roblox. The disadvantage is that we pay a lot of money for Robux to play Roblox, but we don't earn a lot. It's very hard to earn any money in it. But we see trends shifting from playing and gaming to game and earn. And we will hear in a short moment from Federico how that is developing. The game Axie is an online game, and gamers can actually earn during the game. And if you earn a lot of money with Axie, and let's assume we do, let's assume that for a moment, what happens next is we can step out of that game at any point in time and exchange our earnings for real money, be it rupiah or dollars or euros, or we can transfer it into another cryptocurrency. Are these kind of models the future? That will depend on what's on the next slide. And that is, what are governments doing in this space? And we hear governments are slow, governments don't understand it. And that's true. But there are 3 conditions for the crypto sector to take off. And these are not my 3 conditions. These are the conditions that a lot of experts state, and I believe in that. First of all, we need a lot of people using it. Second, it needs to add value. It needs to actually solve real-life problems that have not been solved yet. If you don't add value, you end up with speculative cryptocurrencies, where the same amount of money goes around and you have a few winners and many losers. And the third condition for the crypto sector to thrive is for governments to allow it or actively play a role in it. And when you have that, you actually can have a crypto sector with very exciting opportunities. And that government role is, of course, what we're going to talk about today, later on in the area of tax. Thank you. I'm going to hand over to Federico Rapetti. It is an immense honor for us that he is with us today. He works in the Mergers and Acquisitions Group of Process Group, and he is going to set the landscape for us in what the Process Group thinks are the trends and what is happening in this very, very exciting sector. Thank you. Over to you, Federico.
Thanks, everyone. Really appreciate the invite. What I'll try to do just in 10 minutes will be just give a general overview of the industry, right? There's a lot of stuff going on, so we'll try to condense it in just a few minutes. And really show why Prosus is actually excited about this space that is emerging, right? We can go more in detail in the Q&A session. But where I will start from is this price chart, right? I think typically, really price is the heartbeat of this industry, right? And it really correlates with the headlines you will see in the newspapers, right? I think what happened in 2001 has been, a great growth in terms of prices, right? Bitcoin and all the other currencies hit a all-time high, sometimes in the middle of 2021. What also happened has been a great adoption from both retail investors as well as institutional investors. So big pension funds, companies like Tesla, as well as high net worth individuals actually jumping on crypto. Just to give you an idea of like how the market looks like today, Bitcoin is still by far the largest cryptocurrency, right? It's about 50% of the total market. There's Ethereum, which is arguably like the second most vibrant community in the space. That's about 20% of the market. And then you have stable coins, which I will go more in depth at a later point during this presentation. I think I would be amiss by not mentioning that probably these numbers you see in this chart are no longer up to date. Over the past, I think like week, there's been actually quite a correction. I think we're probably 20% down from those levels. But still, I think the bottom line here is that we are still actually fairly above the levels of just 2 years ago, right? Moving to the next one, right? I think people often compare crypto with the internet in terms of adoption, right? I think today we are at about 300 to 400 million people that purchased cryptocurrencies, right? And then, if you compare that with, the internet, that's actually quite comparable. Like you will see here that the adoption trajectory, it's more or less in line. Obviously, the question will be if this adoption will kind of like follow in the next years, but we are there, and that's actually why people are extremely excited about crypto and this Web3, like the third generation of the internet, being built on top of cryptocurrencies, right? So this gives you a picture of like why so many investors are actually excited by this new industry that is emerging. I think it's quite clear. I mean, I'm sure you have seen this one in your own experience, but cryptocurrencies happen to have a good appeal for younger people, right? You will see here that adoption, it's actually more common in younger generations, right? People that don't necessarily have access to traditional forms of investments like real estate or gold or stocks, right? And crypto is much more accessible, right? You just need a mobile phone to essentially be able to trade. Therefore, you really see that the adoption is happening in the younger parts of the population. And that also means that there is a lot of smart people like yourself that are starting their own companies in the crypto industry, which is quite exciting, right? A lot of startups are being built, a lot of ideas are happening, and hopefully something will really grow in the near future. The other exciting data point, at least to me, is this adoption actually is coming on a global scale, right? Until a few years ago, cryptocurrencies, and in particular Bitcoin, were predominantly happening in developed markets like US, Europe, right, where technology is actually arguably is a bit further advanced, right? But what we have seen in the past couple of years has been really like a global adoption of cryptocurrencies, right? A lot of markets that traditionally would be at the periphery of the financial markets are really jumping on board to this trend, right? You see here, for example, Latin America, Turkey, Nigeria, as well as parts of Southeast Asia, including Indonesia. You see that there is actually quite, if not mass adoption, at least mainstream adoption, right? Why is this happening? Well, a lot of those markets typically have the fiat regime, like the currency regime, which is a bit like unstable, right? Whether there is inflation, whether there is actually a risk of arbitrary interventions by governments, right? I think people increasingly are moving to cryptocurrencies as a way to safeguard their assets, their savings, right? When your currency depreciates by 30 or 40%, like in Turkey or in Argentina, you will be inclined to rather keep your money into Bitcoin, as much as Bitcoin is volatile, right? About Indonesia specifically, right? Probably much closer to you. actually Indonesia, in fact, it's one of the leading countries in terms of adoption, right? You see here that literally in the last 12 months, the whole country discovered cryptocurrencies, right? So we're essentially talking about like a 4 times exponential in a matter of 12 months, right? I think the latest data from the central bank, the commodity agency, it's for, I believe, 13 million people that have exposure to cryptocurrencies, which is rather impressive, right? Also, when you compare that to people that have traditional exposure to traditional equities, like stock market and whatnot, right? Indonesia is actually quite crypto friendly, meaning that the regulators recognize crypto. They have put in place a licensing regime, meaning that if you want to offer crypto trading, you need to be licensed. And on top of that, there is also a whitelist, meaning like a list of currencies that are essentially permitted to be traded by retail users, right? Which hopefully takes away some of the most risky products that are quite openly scams, right? I think I thought of putting here like this the picture of this gentleman. I don't know if you are familiar with, but this gentleman here is actually a person that made an NFT, like a non-fungible token, with his own image, his own selfie, right? And he managed to sell it for $1 million, right? So I think that's a good show of like what's going on with Indonesia crypto. I think on one side, the good news is that Indonesians are really curious about crypto and they're trading with it. I think the bad news is that, if you got into crypto in 2021, you are, most likely probably lost money, right? With the recent correction, I don't know if you have experienced that, but chances are that you're probably below your initial investment, right? The other thing to mention about Indonesia is that Indonesia crypto is not Bitcoin and most likely is not even Ethereum, but it's more like more recent projects, like some of those like emerging trends like Cardano or Polygon, or maybe even like Shiba Inu, right? So some of those more recent projects, which arguably have a bit less track record, but I think that's where a lot of Indonesians are coming to trade. Which I think is a good segue into this token taxonomy, right? Which means like a general classification of the type of cryptocurrencies, right? That's a fairly complicated topic, but really at the highest level, you have Bitcoin, right? Which is digital gold, meaning the supply is actually limited and there is predictable inflation, right? And on top of that, governments cannot really take it from you, right? Like once you have the keys, nobody can touch them, right? So this really gives Bitcoin the properties of digital gold, right? You have a second category, which is what they call utility tokens. And probably the most notable is Ethereum, well, Ether, which is the actual currency. And essentially those utility tokens allow you to execute some code on this decentralized computer that exists on the blockchain. Now, it's a bit complicated, but I think that's why a lot of investors are excited, because really this decentralized way to build technology and applications can really allow you to move to the next iteration of the internet, right? You have then stable coins, which are an interesting trend that has emerged over the past couple of years. And stable coins are nothing but the representation of a dollar or like any fiat currency that happens to be living on the blockchain, right? So the price is constant. It's always $1, at least in theory, because sometimes this doesn't really work out, as we've seen recently with Luna. But conceptually, people are moving money from the fiat world, like the banking world, into the crypto world, because they feel that blockchains are more efficient, right? People are using stable coins to move money across borders, to purchase goods and services, and eventually try to replicate the banking system onto a blockchain, which it's quite an interesting thing happening, especially for a company like PayU and Prosus, right? We then have NFTs, right? NFTs, which stand for non-fungible tokens. What they do is that they take a lot of the properties of Bitcoin, meaning the number of NFTs is actually limited. It's capped, so no more can be created. And this essentially has a lot of the properties of like art, like a famous painting. Well, for a fact that only one exists. Therefore, there is value in this scarcity, right? So in the last 1 year, NFTs have been like all over the place, right? I think a lot of crazy stories happening of, monkey pictures being traded for like $1 million, or like selfies of young Indonesians going in the market for $1 million. But the idea is actually this scarcity enabled by the blockchain drives value, right? You also have this emerging category of actually social tokens, a bit less adopted as of now. But the idea is that you create a community, and the token is essentially like a way to show that you belong to a certain community. And by having this token, you can, access to specific services or specific events or things like that, right? So that's really like a general overview of like the 4 or 5 different types of quote unquote tokens, right? Now, moving to the next one. Now, this slide is actually a bit dense, but I think, so why are people buying cryptocurrencies today, right? Why there is like 300 million people and 11 million Indonesians that decided to buy cryptocurrencies, right? To be entirely transparent, 90% of whoever is buying cryptocurrencies is buying that because they hope that the price will increase, right? Speculation, okay? Like somebody made good money, like there is this word of mouth, and more people buy cryptocurrencies with the hope that, the price will go up. When it goes up, everybody's happy. When it goes down, obviously not so much, right? But what I want to show here in this slide is that there is more than that, right? I think the reason why so many people are excited about cryptocurrencies is that because there is so many more industries that could be disrupted by cryptocurrencies, right? So starting from financial services, like payments, lending, banking, right? You have this emerging trend called DeFi, which stands for decentralized finance, right? Which has really seen a lot of development over the past couple of years. And that's really like a way to create financial services in a different way, running on top of crypto, right? So that's a really interesting use case that arguably seeing a lot of innovation. Of course, then you have gaming, right? As we just heard, this idea of actually moving currencies in Roblox and put them on a blockchain and potentially actually managing to be quote unquote paid to play, right? It's actually quite powerful, as we've seen in the Philippines, for example, with Aset. We then have art. So like this idea of actually taking art, whether it's music, visual arts or others, and put it in essentially in a token. And this actually allows, creators, which means like the artists, to monetize. Today, creators don't really make much money on Spotify or any of those platforms, but in theory, cryptocurrencies would allow them to make money out of their productions, right? Then, of course, you have like communities, as I said before, like these social network tokens as part of social networks. And the last one is what we call here like quote unquote real world assets, right? So what if you can put on a blockchain things like real estate or securities or commodities, right? The idea is that if you can do that, well, you can get the benefits of the blockchain technology, which means like transparency, speed of settlement, as well as innovative things through smart contracts. You kind of like get those benefits and you apply them to real world assets, which today are still by far much larger than the market capitalization of cryptocurrencies. So really, I think that's a story. Like, that's why a lot of people are excited about cryptocurrencies. I will quickly go here. Like, the last one is like, why Pros is excited? Well, we want to facilitate crypto adoption, right? By allowing people to buy cryptocurrencies, custody cryptocurrencies, right? And eventually also unlock some of those additional value services, like transferring money around or even like participating to DeFi. But that's really like what makes us excited, right? We've invested quite actively, and we hope to do more in the future. And with that, I'll stop my presentation and pass it to the next speaker.
Federico, thank you very much for that. A really interesting insight into not just the scope of crypto assets, which is an important thing to consider today, but also the business case for it and the reason why there's so much excitement around it. I think there was some very strong messages in there around why this is such an exciting industry and why Naspers and Process is so keen there. We saw the huge appeal for young people. And obviously Indonesia has a very young demographic and is such an emerging nation. So the uptake by nations like Indonesia is really crucial. For those of you who aren't overly familiar with a lot of the things that Federico has talked about, and he's explained them beautifully there, you're not alone. We did a lot of research in the preparation for this, working alongside Piqué and Stan. And one of the experts who kept on coming up was Dr. Alexandra Bal, and she has written extensively on this topic. You can see her articles on some of the most widely read websites and journals around the world. She's not just an academic, but she's a brilliant communicator on this topic. And she's going to be joining us for our next presentation. And if you haven't joined one of our webinars before, I just remind you that you can click on the link that's in the chat and you can actually view those presentations themselves, and you can follow along yourself, or you can download them. So for the next part of our session today, we welcome Dr. Alexandra Bal to the floor, and she is going to present to us on the general VAT aspects of crypto assets. Welcome.
Good afternoon, everyone. Thank you very much for the invitation, and welcome to the afternoon session on the VAT consequences of crypto transactions. So in the next 15 minutes, we are going to look at the indirect tax consequences of different transactions involving crypto assets. We are not going to focus on one particular country, but we are going to take a more global approach and just identify some common aspects in how countries treat crypto assets from a VAT perspective. And as you will see, the VAT treatment of crypto assets is very much consistent across the globe. So let me share my screen and we'll take a look at the first slide. As you have already learned, crypto assets are digital assets that are transferred and stored on a distributed ledger. In most cases, this is blockchain. An easy way to imagine blockchain is to think about a big accounting book, a big accounting ledger that records all transactions. So, and this ledger is publicly available. So if you buy a crypto asset and you want to see all previous transactions that it was part of, you just look at blockchain, look at this big accounting book, and you see the entire transaction history there. It has also already been said that crypto assets are a very diverse category. They have many different features. And from a functional perspective, we traditionally divide them in three main categories. We have payment tokens, also known as virtual currencies. which is the most popular category. Bitcoin and Ethereum belong to this category. So the purpose of payment tokens is to act like money. They are exchanged for goods and services. The idea is that instead of using money, you use a payment token, virtual currency. The second category are security tokens, which resemble shares, so interests in companies. And they usually entitle the holder to some kind of recurring regular payments. And the final category are utility tokens, which are a bit like digital vouchers. So you can exchange a utility token for other goods and services. An example of a utility token is Filecoin. And then we have this other, let's say it's not a category, type of crypto assets, which are called NFTs, non-fungible tokens. Non-fungible tokens became very popular last year. The most expensive NFT was sold last year for almost $70 million. It's a lot of money. You can see an example of an asset that is linked to an NFT in this slide. There's a picture of a funny moving cat at the bottom of the slide. So that picture, which is also linked to an NFT, was sold for $600,000 last year. As you can see, a lot of money is involved in the NFT market. NFTs are digital tokens, just like any other crypto assets, but they have two features that make them unique. So the first one is that they are unique. So every token looks differently because it contains a link to another digital asset. So that's the second important feature. NFTs contain links to digital assets. For example, NFT can contain a link to this file with a cat that we can see here. It's important to mention, to avoid any confusion, that digital assets, like the picture of the cat, they are not uploaded to any blockchain. The blockchain would crash if we did so. So an NFT, it's not the picture of the cat. NFT just contains some data describing the picture and a link where the picture can be found. So NFTs are not used as a means of payment. Their main purpose is to serve as a digital record of ownership. So you know who owns a particular digital asset if you have the corresponding NFT. Now let's take a look at the VAT treatment of crypto assets across the globe. Most countries provided guidance on the VAT treatment of virtual currency, which, as you have seen, is just one type of crypto assets. However, the good news is that similar VAT treatment applies across most countries. So the VAT rules on crypto assets are very much consistent. Most transactions involving virtual currency are exempt, so no tax is levied on them. And on the next slide, we will see what transactions are exempt. And we are going to look at all different transactions involving crypto assets that may have VAT consequences. So the first example, the first transaction is the use of virtual currency to buy goods and services. So you want to buy something and you pay in virtual currency instead of using legal currency. In that example, no VAT is levied on the value of the virtual currency. Of course, you pay VAT on the value of the goods and services, but no tax is levied on the value of virtual currency that is exchanged in this transaction. We call it out of scope. It's not relevant for tax. The next transaction is an exchange of virtual currency for legal currency or maybe for another virtual currency. And most countries exempt this type of transactions. So it is within the scope of the tax because there are businesses, entrepreneurs involved, but it is exempt. So in most countries, there is a special exemption for financial services, and these exemptions also apply to virtual currency transactions. Then we have creating virtual currency. So virtual currency can be created via different processes. We call them mining, we call them minting, but in general, these activities are either outside of scope, so not relevant for tax at all, or they are exempt. That means no tax is levied. Next, we have wallet services. So online wallets are pieces of software where you store your crypto assets. They're like virtual safe boxes. In some countries, those services are taxable, whereas in others, they are exempt. So the tax treatment of these type of services varies per country. Finally, we have intermediation services provided by exchange platforms. So exchange platforms bring together sellers and buyers who want to buy and sell virtual currency. So as you can see here, a lot of transactions are exempt. However, we have a few ones that are taxable. While most countries produced guidance on the VAT treatment of virtual currency, there is very little guidance on the VAT treatment of crypto assets other than virtual currency. And if there's no explicit guidance, there's some kind of gray area. There's no legal certainty. So what we can do is just to look at the existing law of each country and try to apply the existing legal rules to crypto asset transactions. And if we do it, we may, for example, conclude that in some countries, there is an VAT exemption for financial services that would also apply to security tokens. Security tokens are those that resemble shares. They entitle you to some regular payments. There are countries that have special VAT rules for vouchers. And if that's the case, we may say that utility tokens resemble vouchers. So we could apply the same tax treatment. And then we have this new type of crypto assets, NFTs. NFTs are just digital records of ownership, digital files. So in most countries, they may be treated as digital services. And in general, there's no VAT exemption for digital services. So just to summarize the slide, there isn't much guidance about the VAT treatment of crypto assets other than virtual currency. We have to apply the existing law and determine what would be the most appropriate tax treatment. However, this is our interpretation. There is no explicit guidance. That's why I use the words here, may, are likely to be treated, because we cannot exclude that tax administration will publish some guidance and they will come to different conclusions. Now we will change the topic a bit, and we are going to discuss how to make sure that tax on crypto asset transaction is collected. So we are going to look at the tax administration perspective. if you want to collect tax on something, on a transaction, you need to know that the transaction is happening. And who can tell you about the crypto transaction? There are two possibilities. Either the parties involved in the transaction will tell you that, so the seller or the buyer, they will report the transaction, or if they are not willing to do it, or they are not aware that they should be doing, you may also rely on a third party. And a third party would be a wallet provider or an exchange platform, because those third parties, they see all this crypto asset transactions. And actually, it's very useful to rely on third parties, on third-party reporting, because third parties have more incentives to comply. They are businesses involved in the crypto sector, so they want to be compliant. They don't want to lose any business licenses. And in many countries, third parties like exchange platforms and wallet providers are already subject to anti-money laundering laws. There's an international organization called Financial Action Task Force, VATF, and that organization publishes recommendation for anti-money laundering practices. So these recommendations are not binding, but countries may implement them into their domestic laws. And the Financial Action Task Force issued some recommendations on crypto assets, and they said that all exchange platforms and wallet providers should make sure that they verify the identity of their customers. So there should be no anonymity in crypto transactions. Parties that buy and sell crypto assets should be known. Their identity and their country of residence should be disclosed. And in many countries, tax administration can access information that is collected for anti-money laundering laws. So there are already some sources of information. Of course, it doesn't apply to all countries, but we already see that those major players in the crypto sector slide for this presentation. So there's still no international tax reporting standard for crypto assets. However, this may change soon. So the Organization for Economic Cooperation and Development, the OECD, published a proposal for tax reporting rules on crypto assets. This proposal was published in March this year, and the final reporting framework is expected to be published in October. So the OECD proposal on tax reporting obligations for crypto assets is called Crypto Asset Reporting Framework, abbreviated as CARF. This is also a non-binding recommendation. So countries can look at it, evaluate it, whether they want to apply it or they may not apply it. But it's always a useful reference model. So what the OECD proposal says is that there should be an obligation. So countries should implement an obligation to report crypto transaction to the tax administration. So again, all the platforms, wallets should be obliged to report all the transactions on a regular basis. And then countries should exchange this information. Because as we know, a lot of crypto trade takes place across the borders. So you need to know, as a tax administration, what are the crypto transactions of your residents in other countries. That's why exchange of information is very important. So the OECD crypto asset reporting framework is very similar to another instrument that already applies for financial purposes. And that instrument is called Common Reporting Standard. So under Common Reporting Standard, banks and financial institutions have to report information on accounts and assets held by non-residents. And this information is exchanged then with other countries. So the idea is to implement a similar framework for crypto assets to make sure that all tax due on crypto assets is paid. So just to summarize the last two slides, to ensure effective tax collection, it is very important to rely on third parties. Currently, we do not have special tax reporting obligations on crypto assets. We do not have an international standard. However, this doesn't mean the tax administration is not able to get the information, because most platforms and wallet providers are already subject to anti-money laundering laws, and that means they need to collect some information and they need to make it available to government agencies. So that was the final slide of my presentation. Thank you very much for your attention. I'm looking forward to the roundtable discussion.
Thank you so much, Alexandra, and thank you very much for bringing that international perspective on VAT. We heard earlier from Federico, very interestingly, that it is generally countries in the global south and developing countries that have taken I suppose, that have the largest population who have invested into crypto assets. So to hear that it's the OECD who is now producing the common reporting framework, I'm sure will produce some questions later on. Participants in previous webinars will know that we have some competing narratives, if you like, between the OECD perspective and sometimes that from the global south. So again, Alexandra, we look forward to our discussion later on. We will be joined by Federico, Alexandra, and also our next two speakers. And getting to that now, as Alexandra has given you the global perspective, we're now going to bring it into Indonesia, particularly specifically. And our next speaker is Pak Adhika Bibing Purwanto, and he's joining us from the DGT in Indonesia, and he has a Master's of Economics and has a vast amount of experience on indirect taxation. We are very honoured to have Pak Bibing joining us today. We will be cognizant that our agenda is sort of moving along a little bit, so I apologise to our speakers that we still only have those 15 minutes so that we can get to those rich discussions. But Pak Bibing, a very warm welcome to you.
Thank you so much, Gary. Good afternoon, everyone. Thank you so much. This is an honor for me. This is to have this opportunity to share my experience about designing the regulation of Minister of Finance Regulation number 68, 2022. Thank you so much, Pak Rahmadi Murwanto, the director of PK and also the committee of this event, also our colleague from KPBuild and all distinguished speakers. Let's get started with the topic. Today, I'm not trying to explain something like technical taxation issues, but I want to share, this is what the committee told me to share, the policy design perspective of this Minister of Finance Regulation about taxes on crypto assets. So let's get started. First of all, I want to let you know that when we want to design a regulation, we need to understand what thing that we try to regulate. We discuss about crypto, and then many people wondering what crypto is. So the first step that we want to do, we need to understand what crypto is according to the regulations that is already established in Indonesia. Many people say that cryptocurrency is a currency, a legit tender, But according to the Central Bank of Indonesia, no, it is not. Because if it is a legal tender, it will be a non-taxable object from the VAT law. And then some people say this is some kind of investment. Maybe this is some kind of share, stock, bond, something like that. But unfortunately, no. The Financial Services Authority says that this is not any kind of investment that they supervise. So luckily, our search come to an end when the Commodity Futures Trading Regulatory Agency, or BAPEPT, so I will use the word BAPEPT to refer this agency, says that this is an asset. So this is crypto is an asset. So there is no any other option other than saying this is an asset in Indonesia. And the next question is crypto asset in term of VAT law. So we want to know, after recognizing crypto as an asset in term of the VAT law. So we need to check our law in Indonesia. According to the VAT law in Indonesia, goods are tangible goods, which according to the nature or law can be in the form of movable goods, immovable goods, and I want to stress this part, intangible goods. I think we can agree on this, that crypto is something intangible. And then we also have the Ministry of Finance Regulation number 48, that saying that the digital goods are any intangible goods in the form of electronic or digital information. So we can agree on this also, that crypto is something intangible and digital. So the conclusion is that crypto is an asset. It means crypto is an intangible, taxable good in the framework of Indonesian VAT law. So after recognizing that crypto is an asset, an intangible taxable law, what's next? Let's revisit the topic of this seminar, this webinar. The topic of this webinar is that, is the VAT the right option to tax crypto asset? And I'm sorry maybe to disappoint you, because in my opinion, the answer is no. Yes, the answer is no, because VAT is not an option. Instead, VAT collection is a consequence, not an option, of recognizing a thing as a taxable good. Let's revisit our understanding about VAT principles. We have the principle of neutrality, and also this is the common jargon recently, level playing field. When we say something is taxable, we don't have any excuse, we don't have any judgment or reason to not tax it. We have to impose tax on it. And then level playing field. Well, you know that every time you download an ebook or maybe a PDF or download anything on your mobile phone, you will pay some VAT on it, on your transaction. So there's no reason for not imposing taxes on this taxable good, because crypto asset is also a taxable good. So we need to impose tax on it. So the VAT collection on crypto asset is a consequence of recognizing crypto asset as a taxable good. And the next question, what are the options for imposing VAT on crypto asset trade? The answer is, can we use the normal mechanism of VAT? I believe that most of you very familiar with this kind of mechanism of VAT, where you have the taxable entrepreneur, you have the chain of distribution, and every taxable entrepreneur needs to administer the tax invoice, the output tax, the input tax, and then calculate the tax payable to the government. But will this normal mechanism work? I'm sorry, I think probably not, because the characteristic of the crypto asset trade itself, we know that we have some anonymity, because people who trade in crypto market mostly anonymous. And for example, if you want to buy something, you will not have any idea the one who sell the asset to you. So also the crypto asset characteristic that is borderless and also digital. So this might not work, probably not. And then before we define the right mechanism, let's see how the crypto asset trade works. Our previous speakers already discussed about this, so I will briefly explain the summary of how a transaction works in the exchanger or in the crypto asset market. Suppose I am a user here, user A, and I want to sell my coin. in exchange for money. So in this case, I need some help from the e-wallet provider, or maybe the online platform or the exchanger. Or maybe I want to exchange my coin with another coin. Still, I need the exchanger, I need the wallet to help me, to facilitate me to do this transaction. And in every transaction happens here, I need the help from the miners to verify each transaction and record it on the blockchain system, the blockchain ledger, as our previous speakers mentioned before. So we can see from the summary that all transactions must be facilitated by exchangers, e-wallet platform, or any online platform. So I think we can appoint, I think we can appoint the exchanger, the facilitator of the transaction, to be the tax collector. So in the normal mechanism, the tax collector is the seller. But in this case, we will appoint the exchangers and also other online platform that facilitates the transaction as the VAT collector. So the next question is that possible in Indonesia VAT law? The answer is yes. Luckily, we have the new law of number 7 in 2021, that is the law of Harmonization of Tax Regulations. In the Article 32A, it is stated that the Minister of Finance could appoint another party who is not involved in the transaction as the tax collectors. In this case, the exchangers, the online platform, the e-wallet platform. So in this case, even though the exchangers is not involved in the transaction because the exchangers only facilitate, the exchangers will be the collector of VAT. It means the VAT collector is not the seller anymore, as in the normal VAT mechanism. Okay, and then let's talk about the tariff. Let's talk about the value added. Can we impose the VAT at 11%? How to define the value added? That will be the next question after deciding the mechanism, who will be the tax collector. Maybe this is something new in Indonesia, so let me introduce you to this mechanism. Since we couldn't implement the standard mechanism, like deducting the input tax from the output tax, appointing the taxable entrepreneur, we will use the mechanism of collecting VAT at a certain amount. So what is the certain amount of VAT? In this case, the VAT law deems the value added and the input tax in this mechanism in every transaction. So maybe some of you might think that this mechanism is very similar to sales tax, but I guarantee it's not. So let's see the comparison between the normal VAT mechanism and the certain amount of VAT. In this comparison, in the first part of my example, as you can see, in the normal VAT mechanism, the taxable entrepreneur will administer every tax invoice. The taxable entrepreneur will collect the VAT every time he sells the good to the consumer, or maybe the other taxable entrepreneur. So in this case, the taxable entrepreneur will deduct the input tax from the output tax, and that would be the VAT payable that he needs to pay the government. This is the normal mechanism. So you need to know your consumer or your supplier in this case. And what is the certain amount of VAT? Let's say, this is just an illustration. Let's say the certain amount of VAT that will be collected is 2.66%. In this case, we don't really care about the tax invoice, the input tax. We only need the selling price and the rate of certain amount of VAT. So in this case, the selling price is 150 and the rate would be 2.66, and the result is the same, 4. So this is much simpler, and this mechanism, I believe, according to this Minister of Finance, would work in this mechanism, in this market, in this kind of industry. So talking about the tariff or the rate of the certain amount of VAT that's collected by the exchanges on crypto asset trades. In the perspective of the government, we need to not only collect taxes, because the function of taxes is not only to collect money, collect revenue for the government, but also to regulate the condition in Indonesia. So in this case, we will impose VAT at certain amount of 0.11% if the exchanger or the platform is registered or licensed, or is registered to Bapepti, with Bapepti. If the exchanger is not registered with Bapepti, the rate would be doubled, 0.22%. Why? This is a story behind the policy design process. Let me briefly explain it to all of you. So during the process of designing this regulation, we heard so many aspirations from the industry, from many exchangers. They said, please, they hope that the rate of the VAT should not be higher than the average of transaction fee. For your information, according to our research, the average transaction fee on the exchangers in Indonesia is 0.15%. So I think we can pretty much accommodate the aspiration of the exchanger. The other exchanger says that please make it similar to the income tax on sales of shares on the stock market. For your information, for income tax on the sales of shares on the stock market, the rate is 0.1%. So I think this regulation pretty much accommodate the need of the industry. And also this part is something that the government wants to regulate. So this part that we double the rate for the exchanger that is not registered with Bapepti was designed to encourage the exchanger to register themselves with a government-controlled system that is Bapepti. And for your information, we have 6 new exchangers licensed, registered with Bapepti since April 1st, 2022. So this regulation took into force in April 1st, 2022, and we have 6 new exchangers register themselves to Bapepti. So I think this is just a brief story behind the regulation making process. And we also impose not only on the transaction, but also on mining process, mining activities. But I think we can discuss it later during the roundtable discussion. But before I finish my presentation, I want to quote something that really meaningful for us as the regulation designer team. This quote came from an exchanger, a crypto exchanger in Indonesia. Of course, not from Albert Einstein. I just make it as a sweetener. So one of the crypto exchangers informed us last week that even though they are starting to collect taxes last month, they are very amused. They are very excited to know that their platform subscriber, that their platform's users are actually still growing and growing in number. So maybe some people who are reluctant to this regulation said that this regulation will encourage the capital outflow from domestic exchanger to foreign exchanger, but that's not the case. We also want to make sure that this regulation also create a level playing field for all exchangers, including the exchanger that is outside of our custom area or foreign exchanger. So Minister of Finance can appoint also the exchanger that is located outside the custom area of Indonesia. So I think that's all from me, and I think I still have 1 more minute, but thank you so much. I'm more than happy to join the discussion and answer any questions. Thank you so much. I hand it over to you, Gary. Thank you.
Thank you so much, Pak Bibing. I mean, when we were designing this webinar and speaking with our colleagues at Pekan Stan, we had a lot of questions around the implementation of this policy, and you've clarified a lot of those straight up, talking about the fact that tax is not just about collecting money, but also looking to regulate the industry. And I think it's very interesting if we go back to what Gita talked about at the start of this webinar about the fact that for crypto to work and for crypto actually to achieve the dream, you know, it needs to come into the mainstream slightly. It needs to be adopted heavily, but it needs to also be regulated by government. So the fact that this is one of the reasons that the Indonesian government is imposing this VAT is very interesting to hear. Thank you very much, Pak Bibing. And, you know, I feel like we're leading along really nicely here. We've had that broad overview at the start of why crypto assets are such an exciting topic. We've looked at the general rules around taxation and regulation, and now we've jumped into the topic at hand, which is whether VAT is the right option. To just pivot slightly before we start with the panel discussion, we're going to jump across the Indian Ocean to India itself. And we are joined now by Rohini Agarwal, and she is going to speak to us about the Indian experience. And it is an absolute joy to be able to welcome Rohini to today's discussion. She has worked with various multinational and Indian clients and has a very intriguing background and knowledge speciality. She writes a lot and is a prolific researcher as well. And today she's going to talk to us about this topic of India's experiences and maybe a little forecast of what Indonesia can expect. Over to you, Rohini. If you just unmute yourself, sorry, Rohini. Thank you.
Thank you very much for having me here. It was a great pleasure listening to all my previous speakers. I think I have learned a lot. So thank you for that. And actually, it's a matter of honor and privilege to be with so much distinguished delegates and panelists and participants from across the globe. My warm regards to all. So here I am with some experiences from India on taxing crypto. Although what I am seeing is that Indonesia has done much work in the field of regulation for crypto, and even most of the world is actually is working at a fast pace, but India is actually a work in progress. So I will be talking from that angle, but I will be giving perspective also, and I'm just sharing my slides. So the market of crypto is huge in India because we are huge in numbers, millions of people, billions of dollars. And the size is growing exponentially, but it is unregulated as yet. If I talk about the government of India or the Reserve Bank of India, they do not have a very positive approach for the promotion of private cryptocurrencies in India. And that is why they are working for a regulation for past 2 years. They wanted to come out in 2021, but they are still working on it. And if we look at the objectives of these regulations, we see that majorly two objectives are there. One, to create an official cryptocurrency for the state of India. And two, to prohibit all private cryptocurrencies, barring a few. It seems alarming, but maybe when they are saying prohibit all private cryptocurrencies, they may be recognizing some of the existing and main field private cryptocurrencies. They may be prohibiting the everyday coming up of cryptocurrencies by small individuals or companies. So let's hope. We really do not know what they will be doing, but this is the objective they have written. So with this approach, we can actually see that how the tax regime is going to be. It seems that it will be a stricter tax regime. This year, they have come out with the income tax on crypto transactions. There they have defined a virtual digital asset which will cover the crypto transaction. They said that the tax will be the 30% of the profit made on a crypto transaction, and they have given the least deductions on account of expenses. They said no deduction on account of any expense other than the expense made on the acquisition of the respective crypto asset. So what they have done is 30% is our highest rate of tax and deductions are least. So that shows that they want to tax this crypto asset transactions heavily. That is about income tax. Coming to GST. In the GST, they have not brought any specific provision for the taxation of crypto as yet. And when we look at our general law of GST, we see that almost all the crypto transactions will get covered here. Here we are very much consistent with whatever has been talked is happening internationally or in the Indonesian law. We see that the transactions will become chargeable to tax if we start applying the general law. Definitely with the present mechanisms, we do not have appropriate mechanism to tax it. But I will talk on some basics that how it will get covered. So here, any supply of goods or services for consideration is taxable all around under VAT and also under the GST law. If we look at the first part, what is supply? Supply means all forms of supply, such as, if we look at examples, sale is a very popular form. A Bitcoin sold, there is a tax. Transfer. I think this transfer has got a lot to do with the crypto asset transactions, because this is usually what is done. A data is transferred from one person to the other. So it may be NFT or it may be asset token, it may be any kind of token. But here, when we will come to the next slide, we will see that when we are talking about the transfer, we have to visualize the exact form which has been transferred. Maybe the token might have worked as a modality of transfer, or the token itself may be the object of transfer. But anyways, the transfer is a form of supply. Then barter and exchange. I think here there is a cause of worry if we talk about the crypto asset transactions. Because if I take an example of simple barter, if I transfer a Bitcoin in consideration of a tether, both are commodities if I refer to Indonesian law. So what is happening? That a barter is happening both the sides. I am supplying Bitcoin, in consideration I am getting a tether. And the other person is supplying a tether, in consideration he is getting a Bitcoin. So two supplies are taking place at two places. So if I talk about the tax will be leviable on both the suppliers. Of course, there will be input tax credit mechanism and they can actually take benefit of that, but it is becoming very complex. Then, so one thing is clear, no matter what kind of transaction we undertake in the crypto asset market, that will qualify or fit in one or the other form of supply given here. Now, the second important thing which is there to make it taxable is consideration. And when I look at the definition of consideration here, it says any payment, whether money or otherwise. So, or otherwise, again, will contain every kind of consideration which comes. And then the second bullet in the consideration thing, we see that the money value of any act or forbearance. So even if I do any act or I do not do any act, and I get anything in return, that again will actually make me fall under the mischief of taxability. Now, other thing which is very important is what is the form of my crypto asset which I am supplying? Because it is only if I can call it good or if I can call it service, then only it will become taxable. So what we call as goods. Goods means every kind of movable property other than money and securities. And interestingly, if I simultaneously look at the definition of service, it says anything other than goods, money and securities. So that means under the sun, according to this law, there can be four kind of things. One goods, one services, one security, and one money. So if my crypto asset is not money, which it is for sure, it is not money because it is not legal tender money in India. If it is not security, for sure it is not security. Here we resemble with the Indonesian law, because in India, the security is defined under our Security Contracts Regulation Act, and it doesn't get covered there. So for sure, crypto assets are neither money nor securities. When I'm saying asset here, we are covering both currencies and other assets. And in fact, we think that there is a need to differentiate between the two. Anyways, coming back here, so what we are left with, any given crypto asset, if not money, if not security, it is either goods or it is service. So again, my rate of tax will depend upon the classification, that what are the type of goods under which I can classify the crypto asset, or what are the type of services, because our rate of tax is different for different classifications of goods or services. But in any case, any crypto transaction is chargeable to GST under our general law, being a form of supply, being presence of consideration, and being either good or service. Having said that, we come to what should be the rate. We have got 5 rate slabs here, but the standard rate we can take for now is 18%, which is almost 90% of the goods or services are covered there. Imagine the situation. Every crypto asset transaction with so much of value, bearing so much of value, without differentiating between the cryptocurrency or the crypto as a medium of exchange or crypto as an other asset, which is representing either goods or services, or it may in fact represent immovable property also sometime. So that immovable property thing actually can be taken care of. That will not come under these definitions due to some long interpretations. But for the time being, if we restrict ourselves to only the representatives of goods and services, crypto assets representing only goods or services, and crypto assets representing as currency, we see that if I apply this law as it is, there is a huge issue. And as Alexandra said, that in many parts of the world, when crypto is used as a medium of exchange, there is no tax because they are recognizing that it is only a medium of exchange. But it is not so in India. Nothing of no exemption of this sort has come as yet. And I have already said that what is the approach of our government. So I really do not know what will be coming in the future. A very interesting thing after saying all this, seeing that, okay, this is taxable. Nobody in India is presently discharging any GST liability on any crypto asset transactions, though the volume is very high. The only place where the tax is being paid is the platforms on which the crypto is traded. Exchange platforms are there. So why it is not happening, we really do not know, because the government is also not pushing. This slide I have just taken to show one particular service category from our law, which actually may contain or cover almost all crypto transactions. If you see, it says services whose delivery is mediated by information technology, supply is essentially automated and involving minimal human intervention, impossible to ensure in the absence of information technology. All these things, they get satisfied when I talk about any crypto transaction. And it includes electronic services such as provision of software, music, and other intangibles through internet. So this other intangibles through internet has got a wide coverage. Providing data or information. Again, my crypto transactions will get here. But here again, when we are deciding the form of crypto asset, we actually need to get into the core of the transactions by visualizing that what exactly is being transferred through the NFT or fungible token or asset token, because in that case, this thing which is in between, which is say NFT or any other crypto token, that will become a modality that will not affect the supply in that case. The supply will be of one particular thing which is being, suppose a painting is there, which is being represented by a token. Token is transferred for that. And then money is taken or the consideration is taken, maybe in the form of USD or any recognized currency, or maybe in the form of crypto. In that case, at least one side, there is a supply of painting, not the supply of digital service. And on the other side, yes, the consideration will have to be valued, but it may still amount to barter because the other side of payment is in terms of crypto. Similarly, if I talk about the gaming, like gaming for you play and you earn kind of a thing, which we actually got to know in the start of this presentations. In that case also, the real thing is that one is giving time to play and ultimately he is getting money. And this modality of NFT is done to record whatever is being done. So I think those kind of things will actually bring little simplicity to the taxation of these transactions, because Abhi, what is happening, that we are using the terminology crypto asset as a collective terminology to represent so many different types of things. So there, again, when we apply this law, it can be little comfortable applying in that form. Now, coming to the terminology virtual digital asset, again regarding the form, when I look at my income tax law, which is the only official source where it has been defined, if you look at the definition again, it is not telling you, it is not giving any hint that whether the government is treating as commodity or security or service or what. And then I think I'm running out of time, and I will just close it by few expected things which our government is supposed to do. One, they are working to distinguish between the cryptocurrency and crypto assets. That's one. Secondly, our GST Council has made a committee, and this committee is looking to actually put a very higher rate of tax on the crypto transactions, maybe considering them at best betting casino, but I think this is only a media report, so I will not give much weightage to this. Then reverse charge mechanism may be there for the services sought through foreign platforms. And definitely we all know, as Indonesia is already working a lot on that, valuation of crypto transactions is going to be a challenge, though we have got our wonderful valuation rules. But even applying those valuation rules to the crypto transactions is going to be a challenge. So with this, I close my presentation and hand over the mic to Gary. He's eagerly waiting for me to hand over.
No, thank you so much, Rohini. And indeed, we would love to be able to hear all of those details in full, and look forward to some more explanations during our panel discussion. So interesting to hear that Indonesian perspective, Indian, I beg your pardon. I love that idea. We did speak earlier about cryptocurrency rather than crypto assets being very speculative. So it's quite amusing to see there the notion that cryptocurrencies would be taxed at the same rate as casinos, as viewing it as a form of gambling. We might get comments on that later. We are going to go into the panel discussion now. We have around about an hour left in the webinar. So what we'll do is we'll spend about half an hour with our co-moderators, and it's going to be Gita Haj, who's joining me here. And we are also going to throw to Rotterdam. So we have Prem Kumar Baldusing, who all of you there at PK and Stan will know. He's got a very fond following amongst our Indonesian attendees. And he's going to be joining Gita to ask some questions. We are rejoined by all of our panelists. A big thank you to them for their presentations. As you can see, the level of expertise is phenomenal. And we'll just jump back to discuss what Federico brought us, which was the business perspective on crypto, and the fact that it has a huge appeal amongst young people, but also in nations with quite volatile currencies. This is an option for people in those to try and seek a more stable and long-term investment for themselves. And the appeal there is really seeing just the volume of transactions that are happening through crypto assets. Alexandra brought us that global approach to regulation, and the fact that although there is no singular global attack, I suppose, at crypto assets, this is emerging now with the OECD by October putting out a little bit of a framework on that. We heard from Pak Bibing, very interesting perspective that VAT may not be the right option to approach it, and that's coming from someone within DGT. But in fact, that VAT is also used to regulate, not just to collect money. And Rohini really backed that up with the Indian perspective there. So I'm going to welcome Prem Kumar Baldusing, who's with us in Rotterdam. It's very unusual, but sometimes Rotterdam is warmer than Western Australia, and I think that might be the case at the moment. It's bucketing rain here. How are you, Prem?
I'm okay. Can you hear me?
Yeah, loud and clear.
Okay. It's indeed very sunny in Holland. What's the plan? Are we diving now into the panel questions, the panel discussion?
Yeah.
Okay. Shall I ask the first question?
Please do.
Gary? Yeah. Okay. Yeah, I've learned presentations, and one thing which really struck me was what Bu Alexandra told about CARF. The CARF stands for the Crypto Asset Reporting Framework. And it seems that taxpayers, because, you know, taxpayers, it's part of the DNA of taxpayers, that they can easily avoid the VAT levy by buying or selling crypto assets overseas. So outside the scope, we are talking about Indonesia now, outside the scope of Indonesia. And my question in essence is, do you think that this initiative by the OECD, the CARF initiative, that it will help mitigate tax avoidance by doing transactions with cryptocurrencies or crypto assets? This is, I think, a question for Pak Bibing and Bu Rohini, because they have a lot of experience from a government perspective. I would like to start with Pak Bibing. What are your views on this CARF, and do you think it will mitigate cross-border tax avoidance with regard to crypto assets?
This is a question to me.
Pak Bibing first.
Okay, thank you so much for asking the question. Regarding the CARF, or like a framework that the OECD will create this year, I think that's a good step to give like a clear framework so that all OECD members we don't have to make it the same, but at least we have the similar way to anticipate any tax avoidance. But in Indonesia, we also have this kind of regulation that is created by Minister of Trade, that every crypto asset exchangers platform shall report their transaction every day, every week, every month, and every 3 months. So in this case, it's gonna be very, very useful for us if we have this framework in broader aspect, in the international point of view. So we really support this effort. And I also want to highlight about the tax avoidance by doing the transaction outside the custom area of Indonesia, because in the Minister of Finance regulation, it is clearly stated that any exchangers worldwide can be appointed by the Minister of Finance in Indonesia to collect VAT, and we also have the instrument to enforce this regulation. So the regulation states something like this: if the foreign exchanger doesn't comply to this kind of regulation or the appointment, so the government of Indonesia will block their access to Indonesia network. So maybe if we have this kind of framework in international framework, it will be great and make it easier for us to enforce this kind of regulation in Indonesia. That's all from me. Maybe from Rohinar, I hand it over to you.
Rohini, do you have? Yeah. Thanks.
Yeah, just a
Do you
small
have a view on that?
But I'm audible, I believe. Yeah. See, it is definitely good to have an international framework for the overseas transactions. But I think the first requirement is that we in India need to place the respective regulations properly and to align with the international transactions. So even presently, for other things other than the crypto assets, we are actually aligned our rules with the international rules. So if OECD comes out with those kind of rules, that will help the country also to frame the rules in this regard. So definitely that will be a help.
Okay, it's clear, the answers. So both India and Indonesia, you support this initiative, and of course, I'm aware of the fact that this initiative, it will be finalized, in October this year. And it will also go hand in hand with a multilateral competent authority agreement, so a multilateral agreement in order to get the information from other countries or from the platforms in other countries. So, yeah, thank you for these clear answers. I'm sorry, but given the time, we have to. Yeah, perhaps one short questions to Pak Frederico. You are from business. How are you preparing on this initiative from the OECD as business?
Well, we do not engage directly into the trade of cryptocurrencies, right? I think we are actually an investor. We do not necessarily actively trade, right? I think we've taken a position where we invest mostly in equities related to crypto, right? So private companies. Therefore, we're not that active on the trading part of things, right? So, we do expect the companies we've invested in to comply with the upcoming regulations, but it's not something really on our radar. Not really, being involved in the direct trading of those assets.
Okay, clear. But the companies in which you invest, those maybe companies which offer these platforms, those companies have to prepare on, reporting standards. Okay, clear. Alexandra, do you have something to add? Because you raised this issue, it's very interesting and we have to follow it.
I think those who also benefit from a uniform global standard are definitely exchange platform in wallet providers. So currently, some countries like Indonesia have laws in place to oblige exchange platforms and wallet providers to report crypto transaction. But just imagine the situation in which every country enacts different rules, requires information in a different format. That will be a huge compliance burden placed on exchange platforms and wallet providers, especially if you have to do it on a very frequent basis, like on a weekly or a monthly basis. So I think they will hugely benefit from some uniformity of reporting standards.
Okay, thanks. Over to you, Gitte.
Thank you, Prem. I was so happy you asked Alexandra this question as well, because indeed she raised this topic and I was so curious to hear the answers from the different panelists. I have a very specific question, and that is then followed by a question that every participant here is dying to ask, but no one will dare to ask it. So bear with us. That's the question I will ask after this one. The question I first want answered, and this is mainly, well, it's for the tax specialists on our panel. So Federico, the last question is for you. So first to the other panelists, and that is, do you expect that a VAT, or like in India, a GST on crypto assets will generate a significant portion of government revenue now or in the future? It's not an easy question, but I'm curious why governments are pursuing this. Is it regulatory or is it revenue-based or both? And what are the projections? May I start with our PKN colleague who we haven't heard yet? What is your expectation?
Okay, thank you, Gitte. I'm sorry. It's been an honor for me to speak here from PKN Stan. I feel grateful. I feel very honored to be among you, all the tax experts across the globe. And also, Bibing, last we met, I think, about several years ago. And now you are a policymaker. Oh yes, Jayapura. Jayapura, and now you're a policymaker in DGT. Yes, I'm very proud of you. Okay, I think for my perspective, I'm not. I don't do cryptos. I'm a fundamentalist. I do stock and investing, but no crypto. So in my perspective, with the data, the statistic, I think crypto is growing rapidly in Indonesia, and it is the right time for the government to tax VAT or income tax for this transaction. Actually, when we talk about VAT, I believe because of my colleagues here, also my subordinates, my colleagues do cryptos, but because I'm fundamentalist, I don't do it. I have no idea what is cryptos, but because of this seminar, I think I will take a look at it. So I think it's the time the correct time, is the time for the Indonesian government that to tax cryptos. With the Ministry of Finance Regulation number 68, I think it's good because actually in this pandemic era, and when the cryptos and the stock is growing rapidly, I think it's the right time to tax the cryptos. And also we have to discuss. I think we have to try to manage how to manage the tax avoidance. What's the moderator said about the transaction abroad? I think what Bibing said that we can appoint the trading operator abroad to be the collector. I think that's the right way to tax the crypto, because it's easy for people in Indonesia or other countries to trade abroad, not in Bapepti, but with the regulation that with the authority for the Ministry of Finance to appointed the trader operator. I think that's really good, because it's in this borderless era. It's easy for us to trade anywhere. Yeah. So I think that's my answer, and I think it's the right time. Actually, if I read the government regulation, it's not only VAT but income tax. For the seller, it will be taxed by income tax. For the buyer is VAT. So I think our government is really highlight the crypto transaction, because the both side is income tax and VAT. So I think I think the portion of the revenue for the tax will be higher in the future, I think. Thank you, Gita.
Thank you. But Bibing, do you agree or do you want to add?
Yes, absolutely. As Pak Priman said, that we talking about the timing, I would like to inform you that the government, to be specific, the Directorate of Tax Regulation 1, has started the discussion, the research of the taxation, imposition of tax on crypto asset since 2018. But the momentum hasn't come yet at that time. So before November 2021, we cannot appoint the third party, because the regulation that we need to appoint the other party take into force in November 2021. So because we have the regulation that enable us to appoint another party to collect VAT, and this is it. I guess that's the right moment for now. That's all from me. Thank you. Back to you, Kita.
Thank you. May I move to Europe? Alexandra, do you think that such an indirect tax on crypto assets, it could be a source of revenue for European countries or not?
So in Europe and in many other countries that apply VAT, many transactions in crypto assets are exempt. So exchanges of crypto assets into legal currency, generating crypto assets, this is all tax exempt. If something is tax exempt, it will not generate revenue. However, we still have like a small portion of transactions.
Sorry, I think we lost Alexander there for a moment. Alexander, are you back?
Yes, I can hear you very well.
Okay, I think we missed the final bit of your, I understand it's largely exempt now, and
Yes.
only a very small portion is taxable. Is there scope for this in the future, or do you think that European countries will decide not to go down that road?
Well, if something according to the general rules is taxable, and I mean the example of NFTs, there is no explicit guidance. We apply the general rules. We treat NFTs as digital services. There is no exemption for digital services, so they should be taxable. And why we tax them? I think this is just a general question of fairness. If something is taxable, why to give an like a de facto exemption to it? VAT is a broad-based tax, at least in Europe. It applies to all services unless something is explicitly exempt. There is no exemption, it is taxable. Then, I mean, the right way is to enforce and collect the tax on NFTs, unless the government explicitly decides to make it exempt.
Okay, thank you. May I ask Rohini what your view is on the potential revenue? We heard from you that so far it has not been implemented the way I expected it to be implemented in India, but what do you see as the scope?
Surely this is a potential source of revenue, and the government also knows it. And it is not only the currency, even if suppose tomorrow they exempt the currency part, saying that it is a medium of exchange. But since because of this technology, many regular transactions are getting converted into the transactions of crypto. The modality is changing. So in any case, the revenue is going to be higher. If I say that, okay, the number of transactions will remain the same, only the existing transactions, the modality will get converted through crypto, then the revenue should remain the same. But it will not happen, as many people have got hooked up for this new crypto regime, I will say, because newer types of crypto assets are coming and people are really enjoying dealing with these assets. So we can actually look at the boom and the new technology working at many places where it did not work earlier. Like you gave an example of that gaming, which is in fact a very interesting example. So the things which were not happening earlier are happening now, even in the commercial world, because of the crypto technology. So definitely there are transactions and there should be revenue. Government knows it very well. And the only reason why I said government is not pushing it as yet. There is a tax, but people are not pushed to pay the tax. So this is not a very happy situation. Tomorrow, anything may come from them. So the point here is that they don't have actually the mechanism even to identify how much tax one has to pay. Like you need an ecosystem to collect the tax, how to record the transaction, how to value the transaction, how to do accounting. So if all these things are not there, how will you even demand the tax from the other person? So I would say that our government actually is lagging behind a little in creating a mechanism to collect the tax, but they very well know the huge potential, revenue potential here. And if you look at the thing, they have introduced tax on income tax on the virtual digital assets, which actually cover crypto. So what they will be doing now, their style is, any government, I think, they will catch hold of the transactions from here. And that then, they can trace it back to see that what transactions are happening around, so that they can they can see that whether the GST has been paid on them or not. Because one more feature is there in the crypto asset market is that it is very difficult for the government to trace it. So that is, I think, governments will have to create this mechanism. And this is where our finance minister even was worried in 2018. He said that even if the money is paid for illicit transactions, how will we trace the origin of the money? So I think there are certain areas where some more work is required, but certainly our government thinks that there is a lot of potential for revenue in this crypto market.
Thank you. Yeah, Prem and I were discussing this. Prem, you will recall that when we talk about cryptocurrencies and charging VAT for purchasing cryptocurrencies, that we almost talk about a financial transaction tax to curb sometimes the speculative elements in it. But as we see, as Federico's presentation demonstrated, we see that there is a lot more to crypto assets than these currencies, and they're almost like a tool to really make it to the NFTs. And that's where the interesting, exciting movements are heading, I think. Prem, do you want to add something there?
No, I have another question, but shall we go for it? Yeah. If I look, let's say, from a global level, what's happening, then we see in practice that there are two extremes in how states approach crypto assets. On the one hand, we have, for instance, China that has banned all crypto activity in 2021. And on the other hand, we see countries like Central African Republic and El Salvador that have made Bitcoin a legal tender. So in addition, we also see a number of countries that have a hybrid approach. You know, crypto assets are not legalized, but they are taxing the income derived from crypto assets and crypto transactions. And my question to the panel is, do you think that countries should embrace and legalize crypto assets, given the huge amounts that are involved in crypto assets transactions, or should they ban crypto assets, dealings, and issue their own crypto assets, like cryptocurrencies? We hear that central banks, like the European Central Bank and other central banks in countries, they are thinking about issuing their own cryptocurrencies. Start with Federico because he has this business perspective. Implied in my question is, of course, what is the future of crypto assets? And Federico, you have a view on that. You guys have analyzed it. Is it something here to stay? Because if you look at the news last weeks, we see that crypto assets have really dropped in value and extremely dropped in value. So should we embrace it and legalize it as a state, or should we ban it? Federico.
Thanks. That's a good question. So, I mean, I think going back to my presentation, right? There is 300 million people that decided to put their money into crypto, right? I think there is this view that, you know, like until a few years ago, you know, like Bitcoin, it's only for buying, you know, illicit stuff on the internet, right? And it's still like the narrative, like money laundering, like a lot of weird stuff happening. But I think it's a lie, quite honestly. Like the vast majority of the activity is technology, just like interesting products being developed, right? I think you can take a view of like trying to kill the industry, like China has tried. But to be entirely honest, you know, like people are using those things. Actually, they go at great lengths to interact with crypto, right? I mean, like today, cryptocurrencies are not easy to deal with. Like it's really only for early adopters, right? But those people are finding value in those products, right? So I think you can take, honestly, I'm of the view that at least in let's say like the more democratic world, like countries that actually have democracies or at least like an open debate, I think an outright ban, it's kind of like out of question. I think on one side you have central banks that are trying to push a slightly different narrative, like looking at India, for example, right? The central bank absolutely against crypto, right? They get like an allergic reaction every time crypto is in the mix. And at the same time, they're trying to push their alternative, which is what they call central bank digital currencies, right? CBDCs, which I think you will see happening more and more in the near future. I see a world where actually both crypto as well as CBDC will coexist, right? And I also see a world where, like, you know, institutions like big investors like Prosus, but also like Tesla, that, for example, you know, bought Bitcoin probably like 1 year ago, or, you know, big investment funds that are buying crypto. Why? Because like consumers want to buy crypto. So, you know, like you cannot really ban it if people want it to a certain extent, right? Of course, it needs to be regulated. Today is a bit like the Wild West. It's a bit like a bit of a chaos as we're seeing these days, where there is literally like a number of crypto banks are literally like going insolvent. You need regulations, but regulations are coming, right? So I think whether it's going to be around stable coins or around like exchanges or KYC, taxes, whatever, regulations are coming. And I think ultimately crypto will converge with the traditional financial services. That's my view, at least.
Thanks, Federico. And I think in the interest of time, because Gary, we also want to give the audience to have some questions and answers. I think, Gitte, you had a last question, a last multi-million-dollar question.
It's a question that when I present on crypto, that every participant wants to ask, but a lot of them don't dare to. And that is, okay, I go back to my example. We play Axie Infinity and we do extremely well. We really, really gain a lot of tokens, whatever you want to call it. We earn with this game. And in my case, I probably earn a lot more because my grandchildren will coach me. What do we do with those earnings right now? And this is a question for Federico, because where do you put your money today if you don't want to belong to the very painful and very large group that has lost so much in cryptocurrencies? I do not hold you to this. This is not a legal binding advice, but where would you invest in if you made a lot of gains from Axie Infinity? What would you advise us to do?
So I guess like no financial advice, right? Like what I'm saying is not a financial advice.
All
do your own research
accepted.
and whatnot.
Accepted.
But I think there may be a couple of different routes, right? You can take. I think the first one, and what many people do, let's say that you made, I don't know, like $100 on some crypto, whether it's Axie or something else. I think you can do two things, right? Number one, you can sell your crypto for a stable coin, right? This essentially allows you to lock in your gains, meaning that you exchange $100 of, let's say, Axie token for $100 of a stable coin, which will be stable in value, right? That's a way to lock your gains. I honestly don't know how it works, the conversion, whether you will need to pay capital gain taxes. I think it's one that you probably are more expert than me in that sense. But anyway, that's one route. Like you can like lock in your gains by basically selling for dollars, essentially. The second option would be if you're a believer in this industry and you're a believer that, you know, like cryptocurrency over time, depending on like where the market goes over time, will increase in price. What you could do is actually you sell your token Axie for, let's say, Bitcoin, right? I think what I always encourage people to do, you know, put some money into Bitcoin. It doesn't need to be much, just to try and learn. And literally just like, you know, go to sleep for 5 years. Don't even watch the price. Like, don't even look at the price, right? Because if you look at the price every day, you kind of like get a heart attack, right? But I think the best strategy is actually you buy something. You don't need to trade. You just need to invest, right? There is a difference between trading and investing. Like trading, you try to do something every day. Investing, you put some money there, and, you know, in 5 years or 10 years or whatever you need that, hopefully it's going to be there. Just don't invest something you cannot afford to lose, of course. Don't take loans or ask money from your family to invest. Just put some money. I think it's learning. It's a good way to learn, right? Just put some, what they call skin in the game, like your own money at play. So yeah, I think that's what I would do. I mean, I personally like a big believer of Bitcoin. So part of my net worth is that, it's in a view of like diversification. I think it's something you should do in a sense. It's also a good way to learn if you're curious, for sure.
Thank you.
Yeah, indeed. Thank you. Thank you very much, Federico. I did notice that a lot of people leaned in very closely when that question was asked. There was a deep interest there. So thank you, Gita, for having the courage to ask that. And thank you, Prem, also for your earlier questions. As we spoke about at the start, we love to get questions from the floor. We've had over 200 people participating in this webinar today, and we've had some questions come in. One of them actually relates to, Rohini, one of your earlier comments around about when you were speaking about India's efforts to regulate crypto. And if you think back to when Gita opened a lot of the information today, she talked about what's needed for crypto assets to really take off, and as Federico has spoken about, to really converge with us, with sort of mainstream finance and mainstream society. So one of those was around about people using it a lot, and we've heard that that's definitely the case. 300 million people or more in India and Indonesia are key markets there. But another one of them was not just government allowing it and permitting it, which was a previous question, but actually actively playing a role. So that's been a big theme today. But one of the questions that's come in from the floor, and Rohini, I'll ask you to answer it first, and then maybe we can throw it out wider, is if the fact that, we're talking about VAT not really being an ideal way of taxing crypto, would it be better if Indonesia or India designed a new tax law first, different from the law of VAT and income tax, to draw some revenue from crypto transaction? I love this question because crypto is really trying to reinvent, in a way, the way we do things. So do governments then need to really reinvent the way they do tax? Rohini?
Yeah. Government, as far as taxation is concerned, as I understand your question, maybe I there may be some gaps in my understanding of your question, but I will just repeat it to make it more clear. I think you are saying that if there can be another law to take care of the taxation of the crypto assets other than income tax and GST. So
that's right.
Yeah. So, but I believe no separate law is required. The law is perfectly fine, and even the existing GST got many modalities, very good modalities that can help taxing crypto. So, what actually we need is a good regulation, commercial regulation, I would say, to map out the crypto transactions and to help in accounting methods and in identifying the forms and in valuing the crypto assets. So these are some ecosystems which have to be created, and that may be done through a separate, maybe we can have separate legislation for that, but regulatory legislation which is going to come out, that can also do it. And even we can have separate rules within our GST law for pertaining to crypto assets transactions. So I think that can work well.
Okay, well, thank you for that. Pak Bibing, I'll throw it to you, but we have another question that runs alongside it, and that's saying that some VAT experts claim that there is no other tax in the world that can collect as much revenue in such a neutral way. So we've spent too much energy and time on corporate income taxes. Would you agree with that statement in thinking that VAT is the way to tackle it rather than any other particular method or even a new method?
Yes, certainly. There is no other way to tax it actually. It is not that which tax is better, because the fundamental of VAT, it is a consumption tax. Whenever there is a transaction of supply, this tax has to be levied. And when we are talking about the crypto assets today, again, even today, it's huge market and so many different forms of supplies are there. And tomorrow it is, as I said earlier also, it is going to replace so many existing supply transactions. So we don't have a way out. We can't actually differentiate between the cryptos and the others.
Yeah,
so,
no, I see that, Rohini. And Pak Bibing, is that the same for you in the Indonesian context?
Yeah, actually, there are so many views about that statement, Gary. But in my opinion, I think it depends on every local government, every country, every jurisdiction, because every jurisdiction know what is the best approach for each individual country. For example, if you compare Indonesia with Singapore, I believe that we can do much comparison, or maybe use the same way to tax the business, or maybe the income on the corporate or on the individual. So I think it depends on its government or jurisdiction. But in Indonesia, we pretty much depends on our government revenue, on VAT, but as well as on the corporate income tax.
Okay. And Alexandra, as an expert looking at the global field, what's your take on that? Do you think there could be a new way of taxing crypto that's unique to crypto assets?
I would definitely not recommend implementing a new tax for crypto, since this would increase the complexity of the already complex tax systems. You don't want to end up in a world where every economic activity is regulated by a different tax, because then, of course, you have to define what are crypto activities. If I buy, let's say, coffee and pay in Bitcoin, is it crypto activity or not? So you will have all the kind of problems that will make regulation very lengthy and will make compliance very burdensome.
Okay, that's a very clear and universal response there from all of you. Pak Fitriandi from Piki and Stan, is that a similar view to what you hold? Do you see VAT as the primary way of regulating and taxing crypto assets?
Yes, yes, I agree with Bibing and Alexandra. I think the VAT is based on the consumption tax. So I think that's the right instrument to tax the crypto. And actually, in Indonesia regulation, the tariff for the crypto is very low. It's just 0.11%, and the income tax is only 0.1. So it's a little bit low, because our value-added tax tariff is 11. So it's only 1 per mile. I think it's very low. Also, if we want to increase the revenue, tax revenue, is because of the what do you call it? Is because of the value of the transaction. So I think simplicity is the best way to tax the crypto trading. I think it's very simple in Indonesia, and I think it's not a normal mechanism. We use a certain amount, so it's, what do you call it? Certain amount of special mechanism to tax the crypto. Yeah.
Yeah. All right. Thank you very much, and thanks for all the forthright nature of the responses. The next question from the floor, it will interest our partners. I know we have Leila Latif listening in from our partner in the Committee on Fiscal Studies. And we do a lot of work in CapaBuild discussing the illicit financial flows around the world. Federico referenced earlier the fact that there is a perception that crypto assets and cryptocurrencies can be a little bit of a vehicle for this. And so we have a question from the floor about what should governments do, and that's across any country, to prevent the utilization of crypto assets as a means of money laundering, even terrorist financing and other illegal activities. Alexandra, if you don't mind, I might throw it to you first. Do you already see some effective action happening there? And are there any other avenues you could see exploring?
Well, we have already some laws in place to prevent the criminal activity around crypto assets. So in my presentation, I mentioned briefly anti-money laundering laws, and their main purpose is to prevent illicit practices related to crypto. So of course, if some abusive practices are happening, the most important thing is to detect them, to find out who is doing what. And that's why we need to be able to identify the participants in the crypto sector by imposing certain due diligence obligations on crypto platforms, because that's the main way how you transfer crypto assets. You use an exchange platform, you need to use a wallet to store crypto assets. So if you regulate these players, if these players will be obliged to identify their customers and monitor the pattern of crypto transactions, then you may detect illicit activity.
All right. Thank you, Alexandra. I'm interested, Pak Bibing, as someone who is part of the policy regulation and policy formulation, was this part of your thinking during the development of these policies?
Exactly, Gary. Just like Dr. Alexandra Paul said earlier, that can you hear my voice? Sorry.
Yeah.
Okay. Thank you. That the consideration that we put into our work during the formulation of this regulation is that we want also support the agency from the Minister of Trade that supervise the crypto exchanger, so that we create the different way, different rate for the certain VAT, the certain amount VAT, so that we can encourage exchangers to register themselves, to get license by the government. Because when they are registered with Bapepti, that agency, they need to comply to some regulations that created by Bapepti, including the anti-money laundering, anti-terrorism, and also they create a system of knowing your customer, just like the system that has been used by financial services industry right now. So yes, that's true that during the formulation of this regulation, we take it into account into our consideration.
Thank you very much. We have a comment there in the chat. I told you that Layla Latif is listening in there, so she's giving us the East African perspective as well, to view in on that. And what about from India, Rohini? Is this very high up in the consideration of policymakers? And do you think it should be higher up? What is going to be done to really tackle this problem?
It surely be there when they are working on the policy, and it's actually they are getting late in coming out with the regulation, because this needs a lot of working in terms of technology and putting it at the right place to work for that matter. But definitely, because at one place they are talking about prohibition, if they are allowing something, they need to put in the correct measures to take care of such kind of situations, that no fraud transactions happen or something which they do not want happen. So they definitely would be taking into account all the possible methods if they exist, or they will try to find out. In any case, I think there is no way now. They'll have to.
All right. Thank you very much. We're going to just move over to Federico quickly. We've had another question come in here directly, and that's looking at, from a business perspective, when a country puts in regulation on crypto assets in this example, what is your perspective there? Do you does it make you more averse to investing in a company that might be based in a country or might be subject to these regulations?
No, not really. I think it's actually the opposite, right? In a sense that if you see the history of crypto over the past 5 years, the whole industry has grown in a bit of a gray area, right? A lot of uncertainty. Now, as you get the government to put regulations in place, first of all, is an implicit recognition of the industry, right? They have the right to exist. And at the same time, also gives a bit more like a certainty, right? So that typically regulations make the leading players stronger, right? I think quite transparently, like today, if you look at the industry globally, about 50 to 60% of that is represented by a company called Binance, right? Binance is, until recently, has been operating completely overseas, right? Like offshore, right? They've been a bit like a pirate ship, let's say. But as we see each country regulating domestically, you will see local champions to emerge, right? For example, like the Coinbase in the US, or it's going to be, I don't know, like a Pintu in Indonesia, right? Or CoinDCX in India, right? You will see like the local champions be recognized by the government, and really they're going to be the, you know, the point of contact for regulator. I think like the problem the regulators had so far is that they don't really have somebody that can call and say like, you know, what's going on, right? Because Binance, it's somewhere in the Bahamas or Virgin Islands, and nobody really picks the phone, right? So I think it's a good signal when governments start to regulate it, even if it's a bit heavy-handed, like it's happening in India.
All right, thank you, Federico, and thanks all of the panelists for the clarity of the responses. It's been really really enlightening this afternoon. Prem, I might just jump back to you. Do you have any closing comments? Because I know when this webinar planning first begun, by your own admission, you weren't a crypto asset expert. During today's presentations, what are some of the things that have stood out for you? What have the main learnings been?
Well, I have learned the different angles, perspectives, and views of the different speakers, but I still have the feeling, if I listen well, that the developments in this field are going so fast in a few years, that even cryptographic experts, let alone lawyers or tax inspectors, they struggle to keep up. And I think that will be a challenge because, as Federico pointed out, you have a group of people who like crypto assets, who are going to invest in crypto assets going forward, even in a very volatile market. So crypto assets are here to stay, but I think tax administrations in general, they really have to catch up with the developments. That's my comment. And why do they have to catch up? Because a lot of tax advisors or crypto assets experts or lawyers, whoever is involved, they can easily be frustrated because the rules are not clear. And I know it's a struggle from a government perspective, but my feel is that they have to catch up. That's my comment, my overall comment so far. So a lot of work still to be done.
Yeah, no doubt. And I think for many of us in the audience, I'm certainly no expert, but I've very much enjoyed the ride, both in preparing for this webinar, but more so in joining in and listening to the fantastic experts that we have here today. Gita, you're much further along on your understanding of crypto than myself. What have your key takeaways been today?
I think that right now there are very few people who actually are active in the crypto space. And for it to become mainstream, I come back to the first 3 points I made at the start of the presentation. And that is, it needs a lot of people to adopt this new technology. Further, it needs to add value. It can't just be about speculation. It needs to bring something new to solve problems or to make trade easier, they say often, to reduce friction in the trade. And I can see when that happens, when lots of people are using it, when it solves real life problems and add real value to our world. And when governments either tolerate it or actively participate in it, then it's a given that it's going to be really big. And with that, we will see that tax administrations will adapt and adopt accordingly. But what I do hear, and that is affair for me, is the practicalities. You know, I look at this from the outside in. I'm not a tax administrator, and I think, how are you going to tax this in practice? And that remains a real challenge. We hear a lot about you go for the third parties because they are not the ones who ultimately carry the burden of the tax. So that is the platforms go regulate the exchange platform. So they have to have a license, and then, you know, you can use them as tax collectors. I think they are trends that will only increase, but I see enormous scope for the crypto asset space, but not so much for the cryptocurrencies. I see that more as a tool. So I have, Federico, you have not convinced me yet to go for the Bitcoin. If anything, I go for digital gold at the moment. And the safe option is mainly pegging it to the US dollar, as you mentioned. And given the inflation rate in the US, I'm not sure how safe that is. So I'm going to stick with gold. Maybe I am, in that sense, also a bit more principled, like my PKN Stan colleague. I'm not into gambling or speculation, but it is interesting because you see governments adopting both Ether and Bitcoin. They say in the longer term, they are the two currencies that are really maybe accepted as more mainstream by governments. But not yet. So I'm not an expert here, Federico is, but disclaimers accepted, fully understand. Prem, where would you invest in?
You know, I think it also has to do with age. I'm 60 plus. And if I remember well, one of the slides of Federico, he showed, you know, who is really investing and interested in crypto assets in general. Well, 60 plus people is at a very low end of the scale. And then
but
you
not
have the
zero, Prem.
people. So I don't think that I will invest in crypto assets or cryptocurrencies. Let me have this deposit on a real bank for now. But again, I think it has to do with age also, and interest in the metaverse in general, and this digital universe. So that's my stand on it from a personal note.
Yeah, thank you. Thank you very much, Prem. And you know, I agree with that, and I was also intrigued by Federico's comments that, you know, regulation from a business perspective, I'm sorry to paraphrase you, Federico, is a positive because it's legitimizing crypto and sort of bringing it into the mainstream. Unfortunately, we have run out of time. I mean, you can see from the panelists on the screen in front of you that we've had this incredible expertise at the moment. And Gita, as I remove myself, you will be overjoyed to see the gender equality in this field. And I think that that's really important because as we move into the future, we know that you know, having more female representation is going to lead to better societies across the board. So wonderful to see that representation here today. I want to thank very much all of our participants for their time, for their expertise, for their preparedness to be so frank. To be honest, you know, we find with a lot of taxation matters that we wend and weave our way around answers, but it really was very clear, some of the responses, and we've come out of this with a very good understanding. So thank you very much to Ibu Rahini and Ibu Alexandra, to Pak Bibing, Pak Federico, and Pak Primandita. We thank you so much for your time. And without spending any more time, I'd like to go back to our colleagues at PKN Stan and our MCs.
Okay, distinguished guests, ladies and gentlemen, now we have arrived at the very end of this webinar. On behalf of the Committee and Polytechnic of State Finance, I would like to express my highest gratitude to all of the speakers who are willing to spare time and share knowledge with all of the participants here. I would like to say thank you to all of the participants who have come and participated actively. I hope this webinar could upgrade our comprehension regarding taxation of crypto assets. I also hope that everything we have learned today could be useful in any way possible.
And it is necessary to inform you that the certificate of this webinar will be available on the Google Drive link, which is sent in the email approximately 1 week from today.
Well, that is all for now. I, Alifaran Prabadewijaya, and my partner, Dinis Bisinta Ramadhani, would like to say thank you very much for coming and have a good day.